Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is March 7 and we're starting from euro-dollar pair with Din Lao. EURUSD, upon leaving the sideways range of 1.0800 and 1.0850, increased the volume of long positions, leading to a bullish momentum. As a result, the quote rose above the level of 1.0900. On the 4-hour chart, the RSI indicator has reached the overbought zone, pointing to the overvalued status of this trading instrument, indicative of short-term price movements. On the same chart, the alligator's MAs are headed upwards, indicating an upward cycle. In this situation, the information and use background play a crucial role in the market. For this reason, technical analysis may temporarily deviate from the logical sequence, which indicates that the euro could rise further. In terms of complex indicator analysis, an upward movement is likely in the short-term and intraday periods, which is in line with the price moving towards the level of 1.0900. Here is Laurie Bailey with GBPUSD currency pair forecast. Let's have a look. The British pound consolidated above the daily MACD indicator line as it closed yesterday's trading session. The pair couldn't rise further due to the resistance level of 1.2745. Now it needs to settle above this mark in order to grow more confident in reaching the target level of 1.2826. The peak on December 28, which coincides with the upper boundary of the channel. The level of 1.2745 is not simple. It represents the upper boundary of the 2-month range. And clearly, substantial stop orders are located here. Therefore, the pound needs a strong external impetus. In this case, today's European Central Bank meeting may provide the help it needs. If the ECB does not soften its stance, the pound is capable of reaching the target level of 1.2826 in the coming days. However, if the ECB softens its rhetoric, the pound will return below the MACD line, 1.2705. And the target will be the support level at 1.2610, the lower boundary of its range. The Marlin oscillator is rising, but in an extremely slow pace, with the risk of moving downward. On the 4-hour chart, the price hesitated before the resistance at 1.2745. The Marlin is in a slightly confused state, indicating that it is ready to fall suddenly, if suitable conditions arise. Before the daily MACD line, 1.2705 is the 4-hour MACD line, 1.2689. And its support coincides with yesterday's low. This level, 2689, is crucial. A breakthrough will reverse the trend into a medium-term decline. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Topos. Gold is trading around 21.50. Below the all-time high reached around 21.52 with a strong bullish bias, but could face rejection around 21.56. Gold has resistance around plus 28 Muri, which represents that in an extremely overbought level. If the instrument continues to trade below this area, a strong technical correction is imminent. According to the daily chart, gold has been extending a bullish movement for 8 consecutive days. We see strongly overbought conditions on H4 and H1 charts. However, there are no signs of exhaustion. The daily chart shows that the EURUSD indicator continues to give a bullish signal, although we can see that the instrument could face resistance at December 2023 level. Since then, it could favor a fall of gold. The pivot point is located around 2140. So the outlook for gold could remain bullish if it trades above this area. The metal is expected to continue rising in the coming hours and could reach plus 28 Muri located at 21.56. And even the strong weekly resistance located at 21.70. Conversely, in case gold breaks below 21.56, it could be seen as an opportunity to sell below this area, with targets at 121.40. Around this area, the bullish cycle could resume and could be seen as an opportunity to buy. Additionally, if bearish strength prevails, and if gold breaks below 21.40, it could be seen as a signal to sell, with targets at 20.95. Our trading plan is to sell gold only in case 21.56 acts as a barrier, or we should wait for gold to fall below 21.40. The EURUSD indicator is giving overbought signals, so a technical correction is imminent in the next few days. That's all for today. See you online soon and good luck.